is 9 o'clock. It's Good Friday, March 29th. Quarter is done after today. Forex markets open, crypto's open, equities markets closed. Let's talk stocks, options, Forex, crypto. Let's see where everything's at. Pretty quiet on the day as expected, low volume. Not going to see much happening. Tight currency range, which I posted in the Discord group this morning. So let's dive in and just review everything. Be sure to leave me some comments in the chat if you are looking for any in particular instrument to analyze. All right. Good morning, everybody. Okay. Let's dive into it, shall we? So here is the SPY weekly time frame. We just poked the highs yesterday. It was a really quiet day. Let me see if I can bring up my options platform here, log in. I'll just float this out there, view a couple of things. Okay, so markets closed today. Let's go to, here's a 15-minute time frame. Honestly, the markets were pretty quiet realistically since last week. After Wednesday's FOMC, the markets just kind of went to bed. So there hasn't really been much progress. You can see right here. Let me bring up my drawing tool. This was Wednesday during FOMC. This was the rate decision, which was the pause, the press conference where the Fed sounded pretty dovish. Markets expecting a solid 3 rate cuts this year. That could be June, September, November is roughly the calendar for those rate cuts. So this was Wednesday. Okay. And then we had a gap higher Thursday, and the market was pretty quiet. Okay. We had Thursday to Friday, pretty quiet. We had Friday to Monday, pretty quiet. We had Monday to Tuesday, pretty quiet outside of a little sell off there. And then we gapped higher Thursday with a little poke to the, or I'm sorry, Wednesday with a, just an aggressive rally towards the very end of the day. And then yesterday, nothing happened the entire day. And then just a little tiny sliver of a push to the upside to say, hey, look, we tested all time highs again. So technically that's going to count for like 21 all time highs this year for the SPY. But man, it is crazy quiet. It really is. Like there's just, well, it's going to change, but man, it's crazy, crazy quiet. All right. Willie, good morning. Jacob, good morning. Jan, Gary, Angela, David, good morning, good morning, good morning. Nice to see everybody today. Thanks for tuning in. All right. Happy Friday. Happy Good Friday. Yeah, so that is the SPY. Let's go QQQ. You're going to see the same thing. Here's your Wednesday for FOMC. Wednesday last week. Thursday. Friday. Monday. Tuesday. Wednesday. Thursday. Very, very quiet. And in fact, I mean, if we look at the like 440 to 4, it's man, even that's not even a huge move. It's like 440 to 445. That's a decent sized move. That's a $5 area that from the peak here around 448 and change. I mean, we've moved $5 in the last 1, 2, 3, 4, 5, 6 trading days. Yikes. I did have some interesting stuff to show. Let me see if I can go into. Yep. I talked about this a little bit yesterday with my trading room, our equities on demand trading room. We dove into some price action and gap filling on the SPY. I wanted to take a look at the average trading range. This can go in, I think, indicator based. Yep. So average true range. Morning, Mike. How are you? So I just thought this was interesting. This is just in the last year. Let's go back to the last 5 years. I just like to have, reasonable amount of data. So we talked about this in equities on demand, but I think this is important to share with everybody. Average true range. This is software, by the way, by a group at Edgeful, which is pretty cool. So I just have a bunch of data. They have, 1,000 plus stocks on here. I focus on the indexes. They also put in a futures and forex feed. And anyway, I just want to glean some data with everybody and just share it. Where we were looking at crafting some strategies around, certain days of the week and why, and having the evidence behind it. So this was the average true range, and the standard is that 66% of the time. So this goes back to just like classic tasty trade. If you watch, Tom and the team, Tom and Bob, and it sounds like I'm making up names, but the Tasty Live groups. I mean, they're all talking about selling premiums. They're all talking about their standard strategy is 30 years back tested. Every 10 minutes of data, looking at short strangles at 16 deltas. If you do something like that on the SPY, this is exactly why 66% of the time the range is respected. So if the ATR is $4.08, if you had price sitting, let's say price is at 520. Well, if it respects the range 66% of the time and you're at 520, okay, and let's say that you sell a 525 and you sell a 515, right? So you sell the 525 call and you sell the 515 put, market stays within that range 66% of the time, there's your probability of profit. So you take the trade, and I'm curious if the deltas could cover that much. Maybe they can, maybe they can't. Zero DTE, possibly not. I mean, heck, this week I sold an at the money. I was monitoring a couple of trades this week. I sold an at the money call and an at the money put, and I only collected like $1.50 to $1.80. So going out, $5, $5 going outside the ATR for the day, going outside the expected move for the day. I'm assuming you're going to collect. I mean, it'd be nice to collect over $1, but you're probably not. So, but anyway, this is why. Most of the time, the market respects the range. Now, I dove a little bit deeper into this, and this is standard. So this is across the board, Monday through Friday. But if you go by weekday, okay, by weekday, Monday, the market respects the range 74% of the time, and this is again for the last 5 years. So Mondays are typically pretty quiet days in the market, which means if I wanted to collect some income on a Monday, my best play is not to be directional. My best play is to be a seller of that option. So if price is here, if you wanted to do a defined risk, bull put spread, if you wanted to do a defined risk iron condor, if you wanted to do a short strangle, obviously that's fine. But that's a big, big jump from 66% to 74%. So we kind of nerded out a little bit yesterday in the trading room and just talked about probabilities and if we took trades like this. So anyway, I think I'm just looking at the evidence to add in some Monday strategies, because this is a great way to pad a little bit of hopefully profits and get into the expansion plays, which is just a couple of debit spreads, looking to see if the market wants to move and hit those average trading range for the week. And I typically do those every 1 to 2 weeks. If you go to Tuesday, 67% respects the range. Wednesday, 64%. Thursday, the least. I mean, again, 61% is most of the time, but when Thursday is a likely mover, or the market's kind of needing to move for the bulk of the week, sometimes a lot of time that's a Wednesday Thursday move, and then Friday 64%, right? So going back to the standard, 66% of the time the market's going to respect it, but if you wanted to really give yourself an edge, then Monday would be the day to do that, which I thought was really interesting. So Monday, the best day. Thursday, the worst day. Tuesday, second best. Wednesday's close, but Monday, Tuesday would be your days where you can really look at focusing on the evidence to collect some premiums those days, because the market should, higher probability of time, respect those ranges. But Monday is like dramatically more. Okay. And also range to ATR by a weekday. This was, let's see here. Friday's average is 94.4%. ATR is 408. You can expect the SPY to move $3.85 today. That's what it says. Obviously, the markets are closed today, so that's not going to happen. But this is also nice if it respects the range. So let's talk Monday. respects the range Monday 74% of the time. Okay, how far does it actually move? Well, if the average move is $4 for the day and it moves about 86%, then your average Monday move would be 408 times 0.861. You'd have about a $3.50 move. So again, if you wanted to figure out where can I sell that call, where can I sell that put, where can I put on my legs for the strangle for a single day expiration, it'd be $3.50 above or below price at opening bell. Okay, so I mean, if this is interesting to you, this is some pretty good stuff. If I don't know if you like this, put a put a whatever cool in the chat or ask me in the Discord group, and I'll give you some more information on stuff like this. And then we also talked about price gaps. So if we look here at price action, looking at gap fills, I thought this was really interesting going into gaps down. Okay, most of the time on the SPY, if we gap down, the SPY fills the gap most of the time. Okay, now you can also break that down. What gap is it? Is it a fraction of a gap? Is it a big gap? Is it a dollar amount? Is it a percentage amount? So if we go by size, I think percentage is important because that way it doesn't matter if the SPY is trading at 600. It's still going to be a percentage move versus a dollar move, right? The bigger the SPY gets, the bigger the Qs get, the bigger the Dow gets. Percentage is always going to be relative, right? Like everyone freaks out, like, oh my gosh, the market moved 1,000 points today. Sure, but it's a $20,000 instrument, right? 10 years ago, it wasn't that high. So it's, to me, like, percentage is the only way you can focus because that's going to make it relative to what it was 20 years ago. And you get the historical averages and it's all based on percentages. Okay. All right, Mike, I see that. Thanks, B. Cool. So gaps get filled a lot and small gaps especially. But what I thought was interesting is once you get into, the 1% gaps, here's a 0.4%. So if we gap up or gap down at least 0.4%, the market probability is lower that those gaps will remain on the SPY. Okay, now you can go into stocks as well. I could go into do the same thing with Nvidia and go back for the last 5 years, and you can see that most of the time a gap up gets filled, most of the time a gap down gets filled. So stocks are not the same as the indexes, right? If you go a huge gap, 1 to 1.5%, the probability you can see gap up doesn't get filled as much, but a gap down does. I mean, we also know that Nvidia can do no wrong right now. A 1.5% gap. This is what's crazy. This is rare. This is obviously a very rare occasion, but a gap of 1.5% takes a while to get filled. Okay. In fact, it wouldn't really be the focus. It would be if we had price here and then we gap up. Okay, and we gap up over 1.5%. So this is greater than 1.5%. That gap's going to get filled about 28% of the time, which means even if price were to fade a little bit, I wouldn't expect that gap to fill all the way, and I'd be looking to buy within that gap. That's typically how I play that because if we went all the way back down, we'd fill the gap. So the fact that this shows 28% gets filled, that means that any type of movement into this gap would be seen to me as a demand zone to buy this. Okay, and if we gapped down, let's say that let's switch this around. So let's say we have price here, we gap down. Well, there's enough momentum with that 1.5% that we might fade up a little bit, but then continue lower. And so use that as a supply area to then sell. Because again, probability wise, we don't fill the gap very often. Okay. But just interesting behavior. QQQ, just do a comparison between the Qs and the SPY. Hardly ever filled. If you see a big 1.5% gap, 20% filled, 22% filled. How about a 1%? How about a 0.4 to 1? Right? I mean, they get higher and higher. Like if we have less than 0.5% gaps created, a lot of times those will get filled. So that's kind of the sweet spot of, all right, if you want to be a gap player, you want to make sure that those Qs and the gaps are less than 0.5%. In fact, less than 0.4%. Then the probabilities just keep going up and up. Cool stuff. So I thought that was interesting on gap fills. There's also some volume. If we go to the SPY, which is one of the most liquid ETFs in the world, I thought this was interesting on the market open volume. I talked about this the last couple of weeks. I just kind of mentioned it in passing, but there's a strong correlation with the opening volume for the SPY. In the first 15 minutes, if you average 4,600 or 4.6 million shares, correlation that is going to continue to have remainder of the day high volume is very, very high. So if we start with high volume, we typically go with high volume. And so if you're looking for like, I think I'm gonna have a big directional play, there's a couple other things we can use. We can use volume in the first 15 minutes. You can use the advanced decline line. You can use the advanced decline volumes. You know what stocks are up versus down, and what's the volume up versus down. There's cumulative tick data. There's all sorts of stuff that I'm actually trying to build out in my Thinkorswim platform, so I can have at least a reference. And the reason why I would do that is because over the course of a month, there will be times where these big readings and these kind of extremes that the market shows are perfect opportunities for a good trending day in the markets. And that would be an opportunity for a zero DTE type run, which if you're looking for like high reward to risk in a single day, I mean, I would say you probably have less than 5 of these a month where the market's like, man, the SPY moved, $5, $6, $7 today. It's rare that those happen, but those days that happen, if you are prepared for a little zero DTE, a long option, a long put, a long call, and you get it directionally right, or you can hedge if there's enough movement too. I mean, if you did a long straddle at the open, I mean, again, you'd have to sense that things are going to move. But if you did a long straddle at the open and paid, $3, and the market moves $5 or $6, um, it's it's going to be interesting to see how the price unfolds. But you should be able to carve out some profit depending on how quickly things move. As an example, if it's 9:30 a.m. Eastern time, the market's open, and you've got these indicators showing you that we've got this huge advanced decline line, everything's up or everything's down, everything's pinned to the highs or pinned to the lows. You're looking for a movement, and let's say that move is okay. The ATR for the SPY is $4. Well, if we exceed that $4 and we have a $5 move, most likely, if I did again, I'll just use the price at 520. If the SPY is at 520 and I do a zero DTE 520, which all that means is I buy a call and I buy a put, right? And the expected move is, so we're trading at 520. The expected move on the ATR is $4. Okay. And let's say that the market actually moves 5. Well, from this 520, if I buy a call, buy a put, let's say I get that total fill for like $2.50 or $3. Well, as long as it goes up a big, 4.5 to $5 move fast enough, my call side, let's say my call side is paying $5 of value, while my put side is possibly, you know, down maybe from whatever I paid for it. Maybe it's still holding about 25 to 50% of the value, maybe. And I can still walk away with maybe $1 credit. So I could pay $2 or $3 debit on this trade, have price move, and then still walk away with maybe $1 net credit and take a complete directionally neutral trade in the day, but know there's good volatility. The way to make the most money is you don't take both sides of the trade. You actually pay attention to price and you follow the flow, and we get some good bullish direction. You take an at the money or you take an in the money call, and you get that $3 to $4 move, and you turn that, dollar debit into a $2 to $3 profit. And all of a sudden you go, well, I just made 100% of that position. I just made 200% of that position. Those days can happen, but you need to have some good alignments for that. And those are probably good for 3, 4, 5 times a month, not every single day. So I learned that quickly when I started doing zero DTE last summer. Um, it was at first when I just kind of watched and monitored, and then I started putting in some like, okay, I'll buy the 25 Delta call, and it's really, really cheap. And I noticed that some days were really easy, and I made like a 2x, 3x return. And I noticed other days it would take all day and it hit my target. I'd actually be in profit directionally, but because I had to pay for the option, it barely covered the cost of the trade because I need the strike price plus what I paid for it to be hit by the market. And sometimes it didn't happen. So, long story short, it took me probably a month to realize, like, oh, yeah, zero TTE is totally just gambling. If you want to do it every day, it's like gambling. So, if you want to trade probabilities, sell options, be an option seller. Okay. All right. So anyway, we have the same thing here for Forex, which I think is interesting. I'm going to dive in deeper next week into Forex and futures because same type of stuff. I mean, I want to see how these market correlate. I want to get a bit of an edge on some information. I think this is really important stuff. And anything we can do to carve out some probabilities and have some actual data behind what we do, it makes trading very data driven, right? It's matter of fact. It's not like, well, I think, I feel. That doesn't matter. Do what the market does most of the time, and find out a way to carve out profits when the market does this most of the time. Have a plan B, have a game plan where I know that if I'm wrong, okay, I'll take the loss, or if I'm wrong with options, I can possibly reposition. I can take a loss one day and make it up the next day. I can roll options as well, depending on what the strategy is. So all sorts of fun stuff like that, right? All right, so move this out of the way. Let's talk some charts. Let's go back to the daily chart. SPY at 523 again. Markets are closed today. Opening bell would have been, you know, 8 minutes, but we had, if you can see the candle here, you can see just the poke of the high, just the poke of the high yesterday, and we're going into trading next week. Now, next week's trading calendar wise should be a little bit more exciting. Okay, do we have a daylight savings in Europe this week? Yes, daylight savings in Europe. We have China manufacturing on Saturday. Next week, Europe in what's the bank holiday on Monday? Easter Monday. Oh, okay, so U.S. markets are open. We have manufacturing PMI numbers, job openings on Tuesday, services PMI on Wednesday. Powell is doing a speak at Stanford. Huh. Cool. I'm sure he's getting paid plenty for that. Unemployment claims Thursday. And then Friday, a combo of employment news with the US and Canada. I don't see a forecast yet. We'll see what this looks like on Monday. So you're kicking off Q2. Um, we'll see. I do have some expirations where I'm looking for a move by Friday the 5th, up or down on the SPY, up or down on the DIA. And I did do some maintenance yesterday in my portfolio. Trying to think, we had a nice run on gold this week. Gold made some fresh highs. So here's XAU. 22.23. My first measure move is its halfway point at 22.72. My GLD positions, I've got a 190 call. Right now, that 190 call is up 15 bucks. I think my break even, let me go to my break even here. Okay. I've got a break even at 726. 726. So right now it's up around $15 minus 7.26. I'm up $7.74 credit right now. Puts me up over 100% on my position in GLD. So I'm still looking to ride GLD a little bit higher. This would be my measure move at 212, just shy of 213 actually. But my bigger breakout move is all the way up here towards 230. So I am debating if I take some profit here. Let me use a different color. If I take some profit here and then reposition. Okay. I mean, if we just have just a straight up rally on that breakout, that's totally fine. I mean, I would love to be a participant. I'm giving myself plenty of time in the trade. But if I'm up, 100% right here, or I'm up 100% now, if I'm up 150%, or maybe 200%, depending on how quickly we get to 212 or 213, I'll take a look. I do have a 210, by the way. I have a 210. That's my sell call right now that goes out to um, April 19th. So as we get into April, if it's threatening that 210 level, I might roll it for a credit and try to give myself a little bit more upside. Or if I get it called away, I might even look at doing something deeper in the money, lower the cost basis where maybe my 726 debit can get down to like 650 or $6. Still get it called away, 209, 208, and as long as I can net more dollars, that's any type of roll that I would do would be I'm ultimately going to improve my bottom line and improve the net profit. Okay. Mason says pound CAD in the buy. Let's take a look. I've been looking at this thing going back and forth. No, this isn't a buy in my opinion. This is right here. I've been looking at the pound cat as this trade actually, if we break that. So I don't want to see just testing the trend line. Okay. I want to see if we're going to break, flag, and go. If we're going to go to the upside, I would be waiting for at least that trend line to break right there. Okay. You have to remember if you're trading pound CAD north, you need oil to drop. I still think oil is poised to continue to push higher. Oil's at 83.06, seems to be pretty well supported. This is getting steeper and steeper actually, so I think oil's going to continue to head up, 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 up a little bit, and because of that, I can see the CAD getting a little bit stronger. So I don't, I again, nothing against the trade, but I don't see confirmation on anything yet. If I'm going to be a buyer, I like this break first, and I'd be looking for, break, flag, and go, something like that. It's bullish, or a break, flag, and go. That's bearish. It hasn't confirmed yet for me. So I like the setup. I think it's worthy of a pre-summer push where if we go to the downside, if let's say this pre-summer push on oil goes up to $90, well, pound CAD could easily fall back to 64. We have a yearly pivot around 6,000. We have a yearly pivot this year at 6,700. Okay. So, I mean, I wouldn't mind finding that yearly pivot with a sell trade. If it goes higher, 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 that's fine in the short term. But man, I would love to sell this thing at major resistance and then take it down to that yearly pivot at 67, which from 78 to 67 is over 1,000 pips. So, wouldn't mind seeing how this develops, but you can see it's a little tight, right? To the upside, there's resistance up here, but the market could go after it with a breakout. To the downside, look left, look left. There's plenty of downside here. Even if we just stay in a range, there's downside here on the pound CAD, just like we had for a year or two over here. That was a bit of an outlier to find a bottom, but for the most part, we had a range from 78 to 60 and change, maybe 67. We had about 1,000 pip range right there. So I could see this doing the same type of thing. But you got to watch because you got to be careful on these patterns, right? This is an ascending wedge from this low to this high. Okay. If this is an ascending wedge where here's your bullish direction, ascending wedge to the upside, that is where Mason's right. Like we might see that break to the upside. Okay. But that break to the upside at 73 ish has a lot of resistance being met around 78. And if we hit 78, that would be a good opportunity to look for a high level to sell and then have a big push back down. So it's a good trade. I think the pound cat is worth watching, but just know your higher time frames in your structure that's out there. Okay. Dollar index continues to be just chop, chop, chop. Really, really indecisive. I I still can't get a good feel on the dollar, and I'm not trying to. I mean, dollar CAD is choppy, euro dollar is choppy, New Zealand dollar possibly the best looking trade. Aussie dollar, we're close, maybe need a little bit of a nudge, but I mean, there's just other stuff that's moving. The Swiss pairs are moving great for us right now. The euro New Zealand, the pound New Zealand moving great right now. I think the yen, if the dollar yen breaks above 152, that's a good way to kind of consider the yen basket as well for the carry trade. I've said this on the yen is if we break this low, then I'll change my opinion on the yen. Okay. But if we come back down, go back up, come back down, go back up, come back down, go back up, it's just begging for that level to be tested. It's begging for this level to put stop losses in, and it's begging for that level to get busted higher. Right. And it may not even go sideways. It might actually break sooner than later. And if you want to see, how much weaker can the yen get? Well, look at your Nikkei 225. That's the easy way to see, this thing has blown through all-time highs. We've been on a rip since 2009. We were on a rip since the lows here in November 2023. This rally has outperformed in a big way, right? That's up 34%. That has outpaced the move in the S&P. That's outpaced the Dow, outpaced the Nasdaq by a decent amount. Okay, those are each respectively around 25 to 28%. The Nikkei is up a little bit higher. So it's crazy overbought, but Bank of Japan go into a, positive, I'm putting, quotes around that, positive interest rate at 0.9%. I don't think that the Nikkei is going to all of a sudden implode. So anyway, I think the JPY gets a little bit weaker. Again, I'll change my opinion. So it's not like I'm sitting here being stubborn saying like the carry trade is going to be the greatest thing ever. I just don't see it unwinding right now. We've only been in the carry trade environment for about a year. It started January of last year. I noticed it in the forex trading. So when we've had about 13 to 14 months of carry, it usually continues. There's good and ample liquidity in the markets. Carry trade is king right now. And that's also why we're in this ridiculously low volatility environment. The VIX is low. The forex day-to-day volume is low. If I go into here's here's the tool based on the average moves, right? If we go to the last the last 2 weeks of trading, stay relatively, short term, man, if I look at pips and average moves, I mean, our biggest movers are the Swiss yen, pound yen at 120 pips. I'm not that excited about, the top two currency pairs only giving us 120 pips. If I want to be, looking for more short-term trading opportunities, I love it when we've got maybe 3 to 4 or 5 currency pairs that are trading in the high hundreds, like 180, 190, 200 plus. Are those days forever gone? No, of course not. But I mean, your pound dollar is moving 70 pips a day. Your euro dollar is moving 53 pips a day. I'm actually falling asleep talking about it right now. It's just not that exciting, right? It's not that volatile. Doesn't mean that it's untradeable. It just means like find something that's moving. The dollar index is not moving. A lot of positions are locked. The daily trading ranges are low. So that's why I'm trading what's working. I'm trading the Swiss pairs because it's positive swap and the directions have been at 20, 30-year lows. I'm going to buy lows, right? Swiss yen this last week, we did okay on that. We're sitting at a 169 entry. We're at 167, so we're up about 130 pips. Hopefully, we'll continue to push some lower lows. I talked about this pattern here. If we have this high and this ends up coming down to challenge this trend line, I want to be aware of that trend line in case it bounces. But if we can break that trend line and challenge a low here, I don't care what happens on the Swiss yen. This is a great pattern to trade. If this sets up and rolls over and we break this low, then any type of pullback to that trend line, I'm looking to sell more. Even if it was a 1, 2, 3 wave move. If all I had was a 1, 2, 3, right? If we had a 4 or 5 out of that, even better. But even if it was a 3 wave move, there's lots of opportunity there if we can challenge or break this low. And it might, this is still a possibility. Does it set up a head and shoulders? Maybe. Maybe, but that's a much trickier trade than if we were to just unravel and take out this low and then absolutely look to sell, any pullbacks to trendline resistance or, fib pullbacks and then stop loss above the swing high. That would be pretty freaking good. Aussie Swiss is at a 3. Is it 3 button on it? What is it? 3 button? Are you talking about a price pattern? Are you talking about like a triple bottom? Did you mean bottom instead of button? There's not really such a thing as a triple bottom, but it's support. I'll give you that. It's definitely support, and on the higher time frame, this is all I'd like to see on this pair. If we're holding this low, okay, and we break that trend line, which we are, that is why I'm also long. Okay, and traders know this. I mean, essentially, since this level here down to this flash crash low, I've been buying, and then adding to my position. So I'm still long on the Aussie Swiss. Okay. And I think the support levels hold nicely. If we break above this recent high, I mean, to me, this is on the right hand side of the trend line. I always say this: don't trade the left side, trade the right side. Confirmation is happening now. Confirmation looks pretty darn clean on the Aussie Swiss to the upside right now. Okay. Would it take a little bit more of a nudge to the upside? Sure. Maybe just a little bit more. But I mean, we've already moved off the lows from the lows here around 56 all the way up to a high around 59, and we've already moved 300 pips off the lows. So to me, it's just, can we break this trend line and sustain this move? Because if we can, I'm looking at, let's say this rounds out a low. If we go all the way up here to a high and then have a pullback and another push and a pullback and another push, right? If we have 5 waves to get back to this high, that's a huge profit potential up there at 7,000. Longer term, I'd love to say that I'm going to be in the Aussie Swiss until 7,000. Realistically, if I get it back to 6,000, that's fine. But 6,000 might be wave one, right? Or if we hit 6,200, that might be wave one. And then expect a pullback and then a wave three. If we get a 1, 2, 3, I'm very happy with that move right there. I don't necessarily need to hold all my positions to a wave five. I can take profit at wave three, look for any pause or pullback, and then maybe get a little bit more in for a wave four pause, and then look for a push on five. But probably taking a majority of my profits here at wave three. That should be enough to help me make a huge chunk of profit on a lot of the Swiss pairs that I'm trading. Okay, so a lot of the Swiss pairs look good. We did oil. Gold is up to new highs, right? Pushing towards this halfway point, which I think if we get into next week, um, I want you to keep in mind something here. So dollar may outperform other FX pairs. Okay, so it might be stronger against the euro. It might be stronger against the pound. It might be stronger against the Japanese yen. It might be stronger maybe against the Kiwi. The Aussie seems to be outperforming the Kiwi right now. Maybe it's stronger against the Swiss. Okay, but the dollar will likely underperform stocks, gold, silver, oil, copper, Bitcoin, right? We could have hard assets and physical commodities outperform the dollar, but as a currency and as a central bank and as a carry position, the dollar could outperform the other currency pairs. So I think that's also why the dollar's been very tricky is we're seeing gold rip to these all-time highs, which is exciting. We're seeing Bitcoin hover around that 70K mark. I mean, the equities market keeps melting up. So it's almost like the market is trying to play this momentum and play these gains, but also play like an anti fiat, anti dollar move, where it's like hard assets and physical assets are gaining more traction, having more more love out there than just a currency. So anyway, that's just a thought going forward. It's like the dollar is a tough one to read on the index, but I think that it could based on the DXY, we'll look at our dollar pairs individually, but looking at the DXY, I feel like if the dollar index is going to rally higher, I think it also finds a way to rally along with these other positions that are doing better against the dollar. Like gold outpaces dollar strength and stocks do well because they keep going up higher. The melt up continues gold, silver, oil, copper, Bitcoin. You can talk other stuff too. You can look at platinum, palladium, lithium, uranium, like whatever you want. All these things can outform, right? But the dollar as it stands, like maybe the USD is a better currency than the other ones because right now we're right on the cusp of seeing all these central banks start to cut. Right, Swiss National Bank cut. Was it last week? They cut during FOMC, right? So we had FOMC on Wednesday, the Swiss National Bank on Thursday. They cut rates. We saw a big move in the Swiss franc, but this could open up the doors for the ECB to cut, the Bank of Canada to cut, and these central banks might start cutting before the Fed. If the Fed's going to cut in June, that gives us April and May and June. So in April and May, if we have any central banks cutting before the Fed, that's what I'm saying. The dollar could get stronger. And it might not be the easiest trade because we're in this big range, but I could see the dollar just continuing to drift, right? It's I mean, it's a very crappy index right now in my opinion. And we could go sideways and sideways and sideways and that's fine. We have to deal with that, right? But if the dollar ends up drifting higher, 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 why would that be? Well, we got support here, resistance here. We could drift all the way up to this level. We can hit the broadening pattern top around 108. But if we did that, I could see that happening because other central banks are cutting ahead of the Fed. That's it. That'd be why I think it would be like the dollar gets stronger against currencies, but then underperforms gold. And if silver breaks above 26 and the equities market keeps rallying higher, the dollar will underperform from a risk on standpoint, but it will outperform when it comes to just currencies and carry. So I think that's a fair narrative this year that I think I'll be paying attention to. All right. Okay, it's 40 minutes in. I'm going to be jumping over into the A1 session. I'll start it here on YouTube on my channel if you just want to stay in and pop back in for a 10 o'clock session. Um, I did trying to think. Let me check. I mean, how did I do this week? It's like I had some robot trading. Let me go hypertrend. Oops. Hypertrend for the week up 1,218 pips. Good stuff. I'll post this on my blog. Perfect Storm. 40 pips on Perfect Storm. Perfect Storm Pro, I think, crushed it this week with like over 800 pips. Perfect Storm, where you at? Perfect Storm Pro up 876 pips this week. And Pockets Pattern Pro up 243. So robots did pretty darn well. 243 plus 876 plus 40 plus 1218. 1218. Yep, 1218. So 2,377 pips this week in auto trading. I also noticed I need to post this in my Discord group. I think I need to update my flex trading room as well. So I post this blog every Friday in the afternoon. I just kind of recap, what's going on commentary wise, what's happening in Forex that we captured in the trading room, captured with robots, any gains we had in stocks and options, any outlook on cryptocurrencies, and then updates for the community. So I just talked about a couple of robots and systems for automation. If you want to come into the education portion, this group this text channel, I have market structure full video series that's kind of evergreen, timeless education. I've got all these individual classes with I think all of the Forex related ones have robots. Delta Traders, the stocks and options course. Equities on Demand is a stocks and options trading room. Flex trading room is a flex or a Forex trading room. All these robots, Master Flex, course videos, full strategy guide, education, EAs, so your expert advisors, all this stuff is here. So if you want to check it out, ask me some questions on it. You can find me here in the Discord group. If I've got anybody here joining live for the first time, I will post the channel link if you want to join my Discord group. It is free, and the more the merrier. So I'll put an expiration here that doesn't expire, new link, and then my Discord group. There you go. Do I have a video on how to trade options? I do. I at least have a starting point to give you enough information to be dangerous. If you go to my YouTube channel, youtube.com/Chris Pulver. If you search in my channel, so if you go into videos and you search for options, you can see that I have a few videos here: straddles and strangles, long call, long put. I think I posted 4 within that video series for options 101. I don't know why they're not popping up at the top, but anyway, that's what it is. So you can check out there. I think there's 4 videos there. So if you watch I would start with like long call, long put, and then go into like credit spread, straddles, and strangles. That's a pretty easy way to get started. I try to make options trading as simple as possible. I mean, for me, I probably have, I don't know, 5 or 6 core strategies that I focus on. They give me enough versatility to be up, down, sideways, and get positioned. And I trade a lot in the indexes. I trade the SPY a lot. I trade the DIA a lot. I trade the SPX a lot. I try to craft some positions that are directionally neutral. So if I go, let me see if I can find a screenshot here. I guess not. When I build positions, I use something like this. So if I did I have a trade on the SPY. I know it's in my chart, but basically I just build this out. Let's go option leg, option leg. Current price is 523. So if I did, and I know I have a trade like this already running, I've got an April 5th long. So I'm selling there, and then I'm selling here. So I think I bought the 520 something. I don't know the exact leg. It's on my chart. I think I bought the 522, and then against that I sold the maybe the 532. Okay, and then the 522 put. So that's a call, and then the 522 put, and I sold the like 501. I mean, I didn't know if we were gonna have a bigger move to the downside. So let me just show you what this looks like. So let's $20. Let's go up and just make it symmetrical at 20 bucks or 18. I think this is about right. Yeah, this is about right. So this is a strategy that where we're currently sitting. If the SPY moves up towards 530, so we need about a $7 move by next week. If we get a $7 move, I start to make some money. If we get a $7 or $8 move this way, I start to make some money. If we have a bigger move, then obviously my trade max out there for some big profit. I can take about a $7 position and have this thing pay $12 a credit. $7 position can pay about $15 a credit. So reward to risk. I mean, as long as we have some movement, I'll make some money, right? If price doesn't go anywhere, then I'm gonna have to have I'll have to have a strategy to make up for my weak spot. So that could be a calendar spread, that could be a butterfly spread. There's ways to kind of mitigate some of that risk instead of losing $7. I could probably make something that it allows me to take a debit for maybe $1, and if it pays like $3 to $4 if I'm right. So it could wipe away some of that loss, and I'm only down $1. But that if I do that, it puts my total risk up to $7 or $8. I still need to make money if the market goes up, down, sideways, and the bottom line is we need a movement, right? So either way, there's always a trade-off in options. They're very efficient. They're awesome to trade. If you want to get started, that's a good way to get started. I will say this: I've done this a lot over the last, especially the last 6 months. If I have some traders out there that are interested in a crash course with me, one of the fastest ways to jump on board is, you know, watch a video like Options 101. Watch my Keep It Seriously Simple or Trading 101 video series. I've got a bunch of playlists in here as well. If you dive into those videos and something resonates with you, you want to learn more about trading options, learn more about trading forex or trading the future market, whatever it is. Best way is watch the videos, give me some feedback in the channel, and schedule a private session with me. I think if I could spend, an hour with you or a couple hours with you, I could. And again, I'm giving you all the information that I could possibly give to get you, the fastest accelerated learning curve. I mean, options takes a silly vocabulary, understanding probabilities, and there's deltas and Greeks, all the Greeks, and it's all nonsense. It's a complicated it's a complicated arena that doesn't have to be that hard. It doesn't have to be hard to understand. So as long as you see what do you want to do? Do you want to be bullish on the market, bearish on the market? You want to trade and just have it be sideways? As long as you understand that this is what I'm trying to accomplish, then there's strategies for that. So I've helped a lot of traders get started in forex trading, in options, futures, or index or stock options with just a couple of private sessions. It does help. So if that's something you're interested in, again in the Discord group, check it out here. I've got 1 hour workshops, and I've actually it's been a couple weeks since I've seen a group, but I get little groups of like 3, 4, 5 people. Helps on the cost, obviously, but whatever you want to do, just let me know how I can help. Okay, and we got some people joining in live, which is cool. So thank you here, and I'm gonna wrap it up. I'll take a small break. I know I posted in my schedule today, so I'm gonna jump in, take a 10-minute break. I'm gonna grab a coffee. I'll come back, and the YouTube session will pop back up, and I'll be joining with Nick and Frank and the team to wrap up the week. And then my equities on demand session today will be at 11 o'clock. Not much to discuss since the market's closed, but we can do a little bit more of a deep dive into some of the data here on the SPY. We can just kind of carve out a little bit more strategy stuff and probabilities. So we'll probably dive into that and then do a spot check on the portfolio. Okay. Let's see here. Charles says, low volatility environment you mentioned made me create an account just for 2 different 25 pip scalp strategies. There you go. I mean, that's totally fine. I mean, it's just setting the expectations, right? A low volatility environment, yeah, lower your target basis. Lower your I mean, 25 pips can be done because every single currency pair can at least move 25 pips. So you lower your profit levels and you get hit, you're still making money. So I mean, again, what are you going to do? You can't sit here and complain like, "Oh, the market's not moving." Well, either adjust your strategy so you can still make money or wait for expansion, you know? Cool. Yeah, Kareem says they do forex and just trying to get option. Look, man, I did forex too. I mean, I've traded stocks since 2000. I traded forex since 2007. Forex was my bread and butter. I mean, 100% of my private fund was forex until about 2016. 2016, 17. I started to incorporate, way more income generating strategies. I was better on the returns, better on the risk management. The portfolio was growing way faster on my option side than it was on Forex, because Forex I would sit and I'd build and I'd invest and I'd make a solid, 20%, 30% of my Forex portfolio, but it would take me like 6 or 9 months to build those positions up and then get paid. In options, I can generate income every week, you know, which I'm not saying it may be the same amount of money, but it just feels like I'm in way more control over generating income on a regular basis other than building and hoping. And not that my strategy in Forex is hope, but it just takes so much time and patience to get paid. And what am I going to do if I'm waiting 9 months to have my? I mean, I've been in Swiss franc pairs for over 2 years. If it's taken me 2 years to get paid 100% of my positions in Swiss, okay, great. But what am I going to do for 2 years while I wait for those positions to pay? It's not like I'm just forcing trades elsewhere. I'm going to trade options. I'm going to generate some income. I'm going to increase my assets elsewhere. So anyway, just a little bit more diversified. And I just look, if I could trade options in Forex, I would trade options in Forex. And don't tell me, we'll trade binary options. No thanks. Okay. I want like liquid options like I trade with the indexes and stocks. If I could trade Forex like that, I would do it without a doubt, but I don't. So I can trade, futures options around currencies or currency futures, right? And that's okay, but it's just not the same. So anyway, like I said, if it helps, check out a couple of videos. That's your trust content stuff. You want to dive in a little bit deeper, I think I can help you learn a lot faster by spending some time together. So if you're interested, let me know about the private instruction stuff. I usually do those on the weekends, or evenings, whatever works. So all right, I'll let you go. I'll jump back in here in about 7 minutes. Just come back to the YouTube channel, small break, and I'll join Nick and the team with A1 Trading, and off we go. Okay, sounds good, everybody. Thanks. See you in a little bit.